Welcome everyone. Big welcome from Solarplaza for this new webinar in the Polish market. Today we're going to be talking about corporate PPAs and project financing. Already there with us today, Justyna Mroże, Senior Associate at Denson, and Piotr Dziwniel, Counsel at Dentons. Welcome and great to have you. Just a quick intro. We're going to have a presentation, a few words from my end, and then Q&A. So please feel free to jump in and ask as many questions as possible for today's webinar. Quick mention about Solarplaza. You probably know us about regarding the conferences in large-scale PV that we organize all around the world with quite an extensive track record already. And here are just a few numbers, but not just conference, also a few business lines. I'm running personally Solarplaza Consultancy, which helps and supports investors in scouting new project development opportunities and into entering new markets. So also feel free to get in touch with me related to that. And also very proud about our Solarplaza Foundation, which supports charitable projects all around the world, as always related and within the topic of PV. Also, quick reminder, we'll be seeing each other on May the 9th in Warsaw for the third edition of Solarplaza Summit Poland. I'll say more at the end, so also please remember to sign up and to join us there. Practical notes. Feel free to send in your questions. We have a question box. Also for technical issues, there's my colleague Tom in the back end who can help sort that out. And yes, just give us after 1-2 days to send the recordings and the slides in your email inbox after the webinar. Quick intro. So with us today, Justyna Mroże. She's Senior Associate at Dentons and member of the Banking and Finance practice team. We'll focus on banking, financial, commercial, and civil law, having overlooked already quite numerous finance transactions in the Polish market. And today we'll be also making use of Justyna's expertise and also Piotr Dziwniel, who's counsel at Dentons in the energy and natural resources practice. With experience in acquisition and sales of wind and PV farms. Today, of course, we're going to try to concentrate the topic within solar, and also our expertise in drafting, negotiating delivery agreements, EPC contracts, and O&M contracts for renewable installations. So great to have you with us today. To make this webinar quite interactive, before I will leave the floor to Justyna and Piotr, today we wanted to also launch 2 polls, actually 3 polls, apologies, to hear about your experience in terms of corporate PPAs in the Polish market. And so please feel free to, for the attendees, for those who are listening, to check your screen, because I wanted to ask you first a couple of questions. First of all, in your opinion, what do you see as the most common type of corporate PPA security? Whether it's a corporate guarantee or a guarantee from a parent company, a letter of credit, or a bank guarantee. You can vote on your screen, so let us know what do you think and what do you see as most common PPA contract right now. Should be on your screen, so we'll give you just a few seconds to interact with that, and then of course we're gonna comment on that during the presentation. See some votes coming. Good. Okay, so we see the corporate guarantee, of course, having a strong collateral as company on the back always helps. We're going to maybe mention something about that later. I'll go perhaps to the second poll. Then this is actually related to energy generators. I presume quite the majority of you here today. Do you consider concluding a baseload PPA in Poland? Is that within your plans in the short term? Have you discussed this? Have you analyzed this? What's your take on that? Let's see, it's quite a black and white question, so with two-sided answers. So curious to hear also your thoughts on that. We're seeing more no's, surprisingly. So actually, that's interesting. Let's discuss that. I mean, obviously, PPA market has been quite shocked in Poland, I would say, recent measures. But we're gonna discuss about it. And let's go to the final poll then, which is actually related to off-takers. If we have anyone in the audience, are you willing to conclude a PPA with a settlement in euros? So hedged also for euro-based exposure. Let's see what is the indication. Yes, fantastic. So, of course, we have seen that as in line with market trends, PPAs, of course, for off-takers are really a flexible and attractive instrument. So great to see the result. But let's also discuss that more. Okay, so I think from the polls now, I'm going to leave the word to Justin and Piotr to jump into the presentation and mention that. Again, please feel free to send your questions in the Q&A box, and we'll address them at the end of the presentation. So, Justin and Piotr, the stage is yours.
Welcome, everyone.
Hello, we want to give you a warm welcome to our new panel. Just a short introduction of Dentons. We are a worldwide present law firm. We are proud to represent the clients all over the world. One of the biggest law firms currently on the globe, focusing mainly on transactions and regulatory advice in both banking and energy sectors. We are present in European market in all of the jurisdictions. We are proud to assist our clients in cross-border transactions. We are capable to do so, so that might be interesting from your perspective. As to our recognition, we are proud to be listed as a Tier 1 and Band 2 in both Legal 500 and Chambers Europe's rankings for banking and finance departments, in energy and natural resources, respectively, Tier 1 and Band 1 as well. So after this short introduction, I guess we may start with our part of the presentation. I would like to make a short introduction stating that we will focus mainly on certain issues regarding the corporate PPAs. We are limited in time, and you most likely are aware of most of the issues which are important, but this presentation will also focus on the upcoming trends, which might be interesting from your perspective. Therefore, we introduced the poll questions at the beginning, so thank you for answers with that. That might be useful for the summary of our discussion. Currently, Poland is a very good market for corporate PPAs. I would say it's outstanding with regards to other EU jurisdictions. We see an increasing number of transactions taking place in Poland. The market is ready for a very good standardization of the agreements. The PPAs are widely recognizable as bankable instruments. That transactions run smoothly. The market is right now very prepared for them. What we see, the only issue that still requires some assistance from the regulatory part is cross-border transactions. Right now, the Polish regulations, without amendment thereof, do not yet recognize the cross-border acceptance of guarantees of origin. However, we already know how to address this issue, so if you will encounter such problems, we are able to assist you with multiple jurisdictions on that. So coming to the main issues regarding the PPAs, we identify the main structures regarding the corporate PPAs, meaning the market access agreement, which is simply based on spot pricing, the structured PPA, which is the most common right now, both as physical and virtual PPAs, and the on-site generation, which might be a new upcoming issue, which is based on the so-called active customer model, requires the direct line, which in Poland is still a major drawback for the transactions, but hopefully this will change in the future. But this third model might hopefully open a new set of transactions which we might expect. With the structured PPAs, what is important, except for the term of the agreement, the price hedging mechanisms, which are different. There are different models which can be adopted, both fixed price, collar pricing, giving a wide variety of prices which might fall under the agreement, the floor pricing, and profit sharing in case of any unusual market increases of price. Of course, balancing arrangements must be taken into consideration, and then a topic which I would like to highlight is the right to terminate the corporate physical PPA for the off-taker. This is something which is very widely forgotten about in the transactions. So I would like to emphasize this and give you a short description on that. This is a regulation which stems from the EU directive on the internal market and has been introduced to the Polish energy law, which simply allows the final off-taker to terminate a contract, a physical PPA, which is concluded for a definite period of time, and bear only those financial consequences which are stipulated in the contract itself. So we've encountered in certain transactions that a physical PPA lacked provisions regulating this specific issue. So before applying for the financing, we were able to mitigate this risk, and then therefore secure the energy generator from the off-taker exercising this statutory right of termination for convenience, a PPA which was concluded for a definite period of time. Going to the revenue streams with a physical, virtual, and CFD support streams of revenue for the off-takers. With a physical PPA, what you need to take into consideration is the volume that has to be specified very precisely. As generated, meaning the pay is produced, of course, is the most common in Polish market, the most favorable for the energy generators. Base load, of course, bears a lot of risks for the energy generators, but is very interesting for the off-takers. What we see is that the off-takers are looking for the flexibility of off-take. So baseload is taken into consideration. We'll speak about it later when we sum up the trends on the market. A baseload PV might be considered in conjunction with the energy storage facilities and the integration of those both installations. What is important in physical PPAs as well is the availability risk, the contractual penalties related thereto, and any curtailments that might be introduced by the TSO, the transmission system operator. So all of that needs to be taken into consideration in those contracts. With the virtual PPA, it's widely recognizable on the Polish market, doesn't pose any regulatory threats. It's recognized as a financial instrument, so the contract itself is easily settled under Polish law. Recently, after certain interventions which have been made both on the EU Commission level and the Polish regulatory, the virtual PPAs have been also included in the price cap regulations. So the regulator, after a certain period of time, simply recognized that virtual PPAs are common on the Polish market and help to clarify the issues regarding settlement of virtual PPAs in terms of the price cap regulations. Of course, with a virtual PPA, the off-takers need to, in parallel, secure their physical delivery of energy by virtue of another contract. And of course, this is an instrument which allows the off-takers to obtain the renewable energy, the guarantees of origin, which helps them to prove that they, of course, use the green energy. This is we try to introduce you to certain examples from the transactions that we were involved in. Of course, not indicating the clients, but this was a color type physical PPA, and what has been here a key factor in the agreements was that the negotiations basis between both the generator and the off-taker. So the key features of a physical PPA taken into consideration was the term. Here the off-taker was more willing to have a long-term legal relationships because it helped him to obtain the financing. The collar pricing was introduced here, which was a specific mechanism. The parties agreed to share both either profit or loss, which was outside the pre-agreed collar pricing scheme. The takeaways, the main conclusions from this type of negotiations was the minimum volume versus as generated. Finally, the off-taker agreed for a minimum volume, bearing the risk of not delivering the exact part of energy. The credit support here, we often come to a discussion between the parties. What kind of credit support is better for them? The off-taker proposed a corporate guarantee, whereas the generator expected a bank guarantee, which finally prevailed, allowing the generator to fulfill its financial institution requirements. What you often might see and what you need to remember in those kind of agreements, both from the off-taker side and the generator side, is that simply certain clauses are introduced in the agreement which regulate the potential new benefits, except those which are currently in place. I mean the guarantees of origin, which might be introduced on the EU level and then implemented on the Polish or whichever other market, is to provide a specific clause which would regulate whether those new benefits, if introduced, would be already agreed by the parties that they will be attributable to the off-taker or not. This specific contract was very much ESG oriented because the off-taker was a specific entrepreneur which is already involved in the market, which has already some environmental obligations. This was a company involved in the widely spoken automotive sector. So those companies already attribute to certain environmental requirements. Therefore, it was very important for this off-taker to conclude this agreement. Besides those kinds of off-takers, we see very much ESG-oriented tech companies mainly who wish to conclude those types of agreements. Then going to a specific transaction which we were involved in, a virtual PPA. Here, as you can see, the key features are more or less obvious. Here as well, the EU new benefit clauses and ESG-oriented matters were involved. Now, a very specific provision in the PPA agreements, which refers to the generation assets which are still being developed, meaning the commercial operation date requirements. What is important to note here is for the generator's security, the COD deadline shouldn't be just a one-off long stop date, but a grace period is in many cases introduced, which allows the generator to address specific risks regarding a delay of the commercial operation date. We see this very often with high-scale installations which face certain delays on part of the DSOs with regards to the testing procedure, etc. So this is very important to address this issue in the contract. Of course, the off-taker would then require something in exchange, and oftentimes the COD grace period allowed for the generator is balanced with certain payments that the off-taker or benefits that the off-taker receives in such an interim period. From the off-taker's perspective, it is very necessary to secure your interests with regards to the COD procedure, because if the contract is not drafted properly, it simply may incentivize the generator to leave the contract terminated and look for better opportunities on the spot market. So in order to block such actions, termination payments, contractual penalties should be introduced to those type of agreements. There you see a very specific sleeved structure, a back-to-back PPA, whereby the customer concludes an agreement with the energy trading company, which itself has a back-to-back physical PPA with the generator itself. This structure is mainly acceptable for the physical PPAs, with the virtual PPAs, that might pose a lot of problems, both on the commercial level as well as contractual. What is specific is with the structure is that the middle party, here the license supplier, with a PPA with its final customer, usually has reference clauses to its original back-to-back PPA. So what is mainly taken into consideration is the force majeure. If this affects the generator itself, then the supplier would also be contractually allowed to invoke such clauses, because the whole structure is based on the back-to-back principle. The same with the availability and any curtailments on the generating facility imposed by the TSOs. Here are the main takeaways that are considered in each of the PPA contracts. So before entering into a contractual relation, please consider all of those elements which are crucial for each of the agreement to work on a very good basis. With the capped liability, the last one, I guess it's worth mentioning. In many cases with the virtual PPAs, we see a capped liability on both parties in case of any unforeseeable market price shifts. So that is something which should be taken into consideration. The force majeure clauses, these are very important in all of those agreements. You would see a substantial difference in the physical and financial, the virtual PPAs with regards to this clause. For sure, the virtual PPA seller should not be entitled to invoke the same events as force majeure as a standard physical energy seller. In countries with the legal regime which is not based on the traditional case law, you would need to work on a very precise definition of the force majeure event. For sure, Poland is such type of jurisdiction, so these provisions are drafted very carefully, and they might have a very important effect on the agreement. The result of the force majeure, suspension of the contract for a period which would allow the party affected with the force majeure to simply rectify its results, or a release of both parties from the contract as a whole. So here you might see different provisions with the PV installation. For instance, oftentimes a threshold is introduced, whether the force majeure affects a certain percentage of the whole installation. In case of a portfolio transaction where you have a list of generation facilities on the seller's side, this works as well, because this limits the seller to invoke the force majeure events in cases where in essence it might be avoided because it's beyond a certain threshold, which allows the contract still to operate, the parties to make settlements, and where at the same time it might be a force majeure event itself. So this is very important, and please take a note on that. The force majeure is also taken into consideration with the COD obligations. So the delays of the both distribution system operator or the transmission system operator may as well be introduced in such clauses. Finally, the trends, which is something that might be important for our final discussion and the Q&A session. The last year, as you all know, has seen a very volatile market with the prices. But what was specific is that the grand total of energy contracted under PPAs has decreased from 11 gigawatts in 2021 to just 9 in 2022, still being more than the amount in 2020. But what was specific is the increase of the number of transactions. So we see that the off-takers look for a more flexible possibility. So transactions involving lower capacity of sources with multiple contractors. The corporate PPAs have been recognized by the EU Commission as one of the main pillars securing the energy internal market in Europe. So this gives certain comfort to the parties seeking those types of transactions, that we have a clear political indication that the PPAs will be recognized by the EU Commission, protected, and they should constitute the main instrument which allows the energy market to function. This protects both the off-takers and the European economy from any price shocks, as the EU Commission states. Food for thought for the ending. Off-takers tend to look for more structured products. So this is very important in relation to your question, to your answers to the poll posted in the beginning, that you are willing to conclude a baseload PPA. So a structured product involving the PV, maybe a battery energy storage system, might be something which would open the Polish market more for baseload PPAs, which are not so widely recognizable right now. So for the time being, thank you. I'll give the floor to Justyna. We'll continue with the banking.
What we have been observing on the Polish market in the most recent time is the rollout into the long-term CPPA financings. That's especially comparing to the previous years, while we experienced only financings in Polish renewables based on the auction support and the mix of CFD, short-term PPAs, and merchant. That's not only to the that's of course mainly to the spikes of energy prices on the Polish trade exchange, but also to the belief of both the sponsors and the financing institutions that also the long-term PPAs can support the project with in the long run with the stable and secure revenue stream. While structuring long-term or CPPA financing, the key factors that we should focus would be, first of all, that in case of CPPA financings, terms of that contract, terms of PPA would be negotiated individually, case by case, with CPPA off-taker, comparing to standardized terms for CFD scheme financings. Of course, on the market, we have seen some initiatives to standardize also PPAs themselves. For example, we are aware that there is a template of PPA agreement prepared by EFED, World Federation of Energy Traders. But generally, our outcome based on our experience is that PPA draft would depend on the PPA off-taker entity and the transaction. Also, the other feature that should be closely looked at would be potential liquidated damages and other payments that would be made to be incurred by the SPV producing the energy. In the CFD system, there is closed catalog of penalties that the entity producing the energy would need to pay once the volumes of the energy aren't as big as declared, while in CPPA there might be liquidated damages, availability liquidated damages, and other types of payments agreed within the contract. So this has also reviewed diligently. Also, of course, termination risks being one of the biggest risks in that type of contract should be closely looked at and assessed on a case-by-case basis. This is comparing to CFD schemes where there is no termination risks or a very low risk. This should be very much in my detail reviewed. For example, to mitigate risk related to termination or payment, the potential liquidated damages, we also have encountered tries to, for example, cap that kind of payments. So both the SPV producing the energy and the financing institutions are aware of the maximum liability connected to entering into that contract. Also, CPPA's pricing in CPPA's price indexation would be agreed individually. Also, the indexation index would be the reference to the indexation index would be agreed case by case, while CFD schemes, as you all are aware, are often inflation index price. And last but not least, in CPPA, credit worthiness is a fundamental aspect. It doesn't only refer to the CPPA off-taker itself, which very often doesn't have credit worthiness, but mainly it refers to the parent of the CPP off-taker or the entity providing the security to secure performance by PPA contractor of the contract. But what about projects which already won the CFD auction support? That question is very important because in the most recent times we have seen a very interesting situation on the Polish market that due to very high energy prices, some of the investors who already won the auction support, but won the auction but didn't already enter into the auction system, decided not to proceed anymore with CFD, but replace that with the long-term CPPA financing. And the question is, what's in that situation? In that case, the response is quite easy. Simply the first settlement request or the first declaration doesn't have to be submitted to the settlement operator, and the SPV would lose its auction deposit and will be banned from participating in the next auctions. But as the CPPAs have become more and more interesting solution for many investors on the market, we have also seen that also companies who already entered into the support system are considering switching to CPPA only, CPPA financing only. Of course, in case the SPV has already in place the financing agreement, that would be the total remodeling, the total remodeling of that financing contract would be required. But in terms of support system, the formal exit from the system is not possible. There is no formal exit from the auction support system. and simply at some stage, but it's possible that at some stage the energy producer will decide that the energy he would produce, he would not declare into the auction system, would declare zero volume declarations, and all energy produced would sell under the CPPA. In terms of PPA security, and not only the PPA security that the energy producer needs to grant in favor of the PPA off-taker, but also the PPA off-taker needs to grant in favor of the energy producer. The most common option from our perspective is granting the corporate guarantee by the project company sponsor. That parent company guarantee would be given in favor of the CPPA off-taker, and back to this guarantee will be given the guarantee by the CPPA off-taker itself, or also by its parent. We very often see that the lenders expect that the guarantee to be issued in favor of the project company needs to be issued by the entity that has some credit standing. The minimum credit standing requirements we have encountered are BBB or BBB minus. But in some cases, of course, depending on the CPPA off-taker entity, also we are aware that for some of the lenders, in case the parent of the CPPA off-taker doesn't have a credit standing, maybe the net tangible asset value maybe being in the operation of the relevant off-taker may be assessed and be sufficient to be able the relevant entity as reliable to grant that security. The second option, which is quite common from our experience. I'm aware that you didn't indicate that in your poll, but it's also the letter of credit that it's issued by the senior lenders. It's from our experience that's the second most popular option after the parent company guarantee. It's that's due to the fact that once the project company has already some financing in place, one of the types of credit facilities provided to the project company may be letter of credit facility under which that credit support will be granted to CPPA off-taker. In case the senior lenders issue in favor of the CPPA off-taker the letter of credit, that CPPA off-taker, we often see that would also issue in favor of the project company the bank letter of credit, also parent company guarantee, but then definitely with a minimum credit rating requirement. And we have seen also the many solutions with the CPPA off-takers providing bank guarantees, payable of course on the third demand. The least often option is the second ranking pledge to be established by the project company in favor of the CPPA off-taker. That solution is not very common because as the project company would already have the full security package over its assets, that would require most probably some intercreditor or security sharing undertakings with the senior lenders and the CPPA off-taker. And in that case, most often CPPA off-taker would grant the project company, parent company guarantee. But what should be mentioned to close the issue of security issued both by the project company and the CPPA off-taker is that in case of physical PPAs, we see that the security to be provided by the project company in favor of the CPPA off-taker should stay in place generally until the COD, commercial operation date, so the moment once the project starts generating the energy. Of course, that would, of course, the guarantee from the CPPA off-taker should stay, being payment guarantee in principle, should stay in place for the whole life of the CPPA. that limitation of the period of the guarantee to be provided by the project company, of course, doesn't apply to the virtual PPA, in which the payment guarantees both on the project company side, but also on the CPP off-taker side would survive for the whole life of the agreement. In terms of letters of credit to be issued by the lenders in favor of CPP off-taker, as I mentioned, that's a quite common solution from our experience. And in the most common scenario, we see that letter of credit is issued within letter of credit facility or a guarantee facility or simply term facility. And that facility is in this case secured by senior lenders with senior security package. Once the letter of credit is issued, the relevant commitments under the relevant facility are decreased, and in case the letter of credit has to be drawn, it will be funded by the senior loan. In this solution, there will be also no conflicts between the lenders on the priority and ranking of the facilities or securities, because that facility will be pari passu with other facilities provided by the senior lenders. The second scenario, not as popular as the first one, is a situation in which the letter of credit is issued as a standalone product. In that case, it has to be, of course, secured. It can be either cash cover or sponsor guarantee, or also a senior security package. But that last solution would, similarly as in case establishing second ranking pledge in favor of the PPA off-taker, would require intercreditor arrangements with the senior lenders or security sharing agreement. That's much more complicated, the project, and definitely such discussions on that arrangement from our experience are quite lengthy. In terms of structuring payments from a borrower, from a solar entity producing the energy to CPPA off-taker, generally these payments will be termination, that may be termination payments, delay of liquidated damages, and other liquidated damages that we very often see, for example, availability liquidated damages. So this type of payment should be properly fitted into the cash waterfall under the facility agreement. And what we normally see, that this type of, let's say, quite extraordinary payments for the energy producers, termination payments, delay liquidated damages payments, would occur in the cash in the payment waterfall after the payments that the project company needs to make in favor of the lenders in the ordinary course of business to service its debt, and also to maintain the relevant reserves on its accounts. It should be, of course, now mentioned that structuring these fees, these payments in the cash waterfall, these extraordinary payments, doesn't apply to the payments that the project company has to make in favor of the virtual PPA contractor, because in that case, in case of standard payments made in the ordinary course of business in favor of the virtual PPA contractor, in case the price, energy price differs from the floor price agreed in the virtual PPA agreement, that kind of payments to be made by the borrower would be on the first place in the cash waterfall. The very interesting issue may occur with regard to potential competing claims of the CPPA off-taker and the rights of senior lenders. This may apply, for example, to payment of the availability liquidated damages in favor of the CPP off-taker. That may apply to the situation when the producer of energy, in case such availability liquidated damages are to be payable to the CPPA off-taker, most probably he would receive some damages from his O&M contractor. So in a typical scenario, if there will be no financing in place, all monies received from the O&M contractor would go to the CPPA off-taker. But under the financing agreement, such extraordinary revenues received by the project company are very often subject to the mandatory prepayment. Of course, some insurance proceeds received by the company from the business interruption insurance aren't covered with the mandatory prepayment, but it won't apply to the availability liquidated damages. So that's very interesting question about whether in case of in this type of damages, this should be shared between the lenders and the CPPA off-taker. And other structuring and bankability issues we are experiencing is already mentioned creditworthiness of the PPA off-taker and parent and the minimum credit rating requirements, but also the security over CPPA, because not only the guarantee has to be provided by the CPPA guarantor, but also that guarantee would be subject of security itself. We should, in this case, check what's the governing law of that of the guarantee to be. And preferably, lenders would expect that law of the guarantee would be also the Polish law, so it will be also easily assignable in favor of the senior lenders. No consent should be required to effect that kind of security. The other very important topic in terms of CPPA is, of course, direct agreement with CPPA off-taker. From our experience, we see as in CPPA financing, but also in standard CFD financings, PPA agreements are one of the most important agreements for the existing of the project. And in case of CPPA financing, we very often see that the direct agreements with CPPA off-takers will be very heavily negotiated, and the clauses that will be much of importance to the CPPA off-taker would be any restricted period, delaying the right of the CPPA off-taker to terminate the agreement or suspend its payments. The other expectation in the direct agreements of the financing institutions may be also that the parent company that the company granting the parent company guarantee would be also a party to such a direct agreement. There may be also a situation in which the lenders will be able to introduce the eligible person or the suitable substitute in place of the SPV. So definitely this would be the provisions that would be of much importance to the off-takers. And last but not least, CPPA contractor would become a major project party under the financing agreement, and CPPA would be a project document. What would be the consequences? It would be generally that any default under CPPA would be treated similarly as event of default under the financing agreement, terminating the CPPA or amending it by the borrower would also lead to event of default, or any circumstances affecting the validity of CPPA or availability of the CPPA off-taker to comply with the provisions of CPPA itself. And also, of course, CPPA borrower would be limited to replace the existing CPPA off-taker without the permission of the lenders to amend the CPPA and, of course, terminate it. That's everything from our side. Thank you very much for participating today webinar. And we would like to also, as mentioned by Nicola in the beginning, invite you everyone to the Solarplaza Summit on 9th of May, where you can hear those interesting presentations and panel discussion during that conference.
And right now we are open for any questions that might arise after our presentation. Feel free to submit the questions.
Thank you, Justyna. And actually, that's a perfect way to open a bit the Q&A part. Actually, maybe we'll take a step backwards and go actually to the part where we discussed about the termination of the corporate PPA. One question which we got is if the termination of the corporate PPA is applicable also only to the physical PPA structure, or can it be also applied to the virtual PPA scenario?
Are we referring to the specific termination clause that I raised during my presentation? Or
exactly.
Yes, this applies only to physical PPAs with the final off-taker. This is regulated in Article 4, Section 3A, letter J, I guess, of the Polish energy law. So yeah, just the physical PPAs.
Okay, just the physical. And also before we discussed about the colored formula, floor cap one. Could you perhaps just explain a bit better how that works in practice and how is the colored mechanism defined?
The color mechanism is simply a mechanism which introduced the lower and upper boundary of the price in which it can fit in order to be in line with the contract. So with the physical PPA, where there's a reference to the color, there's a specific calculation included in the commercial terms schedule. And as long as the price is within this color, the contract is settled normally according to its provision. If it goes below or beyond that color, then either the parties share the loss or share the profits. Of course, that requires a lot of business structuring before entering into the contract, and usually we are involved in such agreements in conjunction with experts of the energy pricing forecast or similar.
With RONCAP, clearly. Allow us to take maybe one more question here. If you could comment a little bit on the liquidity in the Polish PPA market. And suggestion from one of the attendees is the issue just on the side of the creditworthiness of the off-taker, but also perhaps is also liquidity affected by the ability to find another PPA scheme in case of termination of the contract. So what's your view in the overall liquidity of the PPA Polish market?
I would say right now that the demand for PPAs is so strong that I do not see a liquidity issue right now. Of course, the termination is an event which is not desired by anyone. And from my perspective, I haven't seen yet a terminated PPA in Poland because the whole structure is relatively new. But I do not see any liquidity issues right now, taking into consideration the growing demand.
So that is also very much a positive note. I'd like us maybe to also, for the sake of time, to close the Q&A here. Of course, Justina and Piotr, thank you very much for your contribution and your presentation, because that gave a lot of clarity. Thanks also for reminding about the Solarplaza Summit Poland. For those of you that joined, feel free also to make use of the discount code to sign up. Lots of interesting discussions and panels and presentations, not just related to PPAs, but also to the whole value chain of the Polish PV market. And we hope to see you there. And once again, Justina, Piotr, thank you very much for your inputs today and your thoughts.
Thank you, and we would like to also thank all the attendees that were present, and hope to see you on Solarplaza in May.
Thank you very much, all.
Thanks again. Thank you again.